Going to basically go over the day, guys, and talk about emotions and just how to manage trading. It's going to be kind of a generalized discussion. Also, you guys to ask any Q&A. That's why I'm here. So wait a couple of minutes, but have some questions. I'd like to do this for the next half hour, answer as many questions as possible, and then just talk a little bit about my journey and what I've realized works in certain markets, and more about managing yourself, more importantly. Sorry, I just got the TV on. You know, trading is not as complicated as everyone thinks, guys. It's just the execution side. I don't want to start yet, but it's all about making sure you got the right head. And some days, like Fous talks about this in Cloud 9, where trading is all about being in that state of mind where the market is clear and concise to you, and you're in the proper mental state to execute your plan. And for me, I realized early on that it's all about the type of structure and environment that you set for yourself, right? So you got Capone in the back. That's where he sleeps. So I found in this market that, you know, it's not about making. I had a conversation with a friend last night that was super important to me. Was that you just got to focus on process and not even the money. And when you start focusing on the money, is when your demise and your downfall occurs faster. And after you trade for a while, and then if you have a couple consistent days, you almost always get into this mental framework of like, okay, I have it figured out. And that's when big biases occur, because you become overconfident and you start to break rules, right? So I said this in chat this morning, like the market has no rules, guys. It doesn't care about me. It doesn't care about you. It doesn't care about anybody. So if there are no rules in the market, then you need to create your own rules and your own structure. It's like trying to operate in an environment with zero structure. How are you going to know when to turn on and turn off, you know, whatever your money-making mechanism is? It's very difficult unless you have rules. So I wanted to start out by giving you guys some of my rules that after year 1, I created. And, you know, I might have taken it from other traders and whatnot, but these are rules that, in my opinion, work. So I'm not going to give it all of you guys, but I'm going to give you all the rules. But I have about like 15, and I've changed them. And it's nothing special, but I want to explain to you why. So this is a good one. Rule number 1 is never risk more than 3% of your equity in any one position. That's important because in this game, guys, it doesn't matter what your win rate is. Like I have a 72% win rate, and it doesn't fucking matter because it's always one fat loss that gives back like weeks of gains, right? And you could have a 90%, 95, 98%. That one time you're going to lose is always going to be fat. So your win rate doesn't mean anything. So if you can keep your losses minimized, and obviously it's easy to say, you know, what my max loss is, and then the day spirals out of control. It's key to make sure that when you do lose, that it's all paper cuts and it's not you hoping and basically breaking some type of rule where a stock is going against you. So then you probably say, all right, Michael, like what kind of rules can I implement to know when to stop out and stuff? So here's a couple. Number 1, do not add to a starter position unless the stock is clearly going in your direction. What does that mean? You have lower lows or lower highs if short, and you have higher highs and higher lows if long. Okay? I'll repeat that. Do not add to a starter position unless the stock is clearly going in your direction. That means you have lower lows or lower highs if short, or if you're long, you have higher highs and higher lows. Second one, if you are short, stop out immediately if the stock goes over and holds pre-market highs as new support. If you are long, you stop out immediately if the stock goes below pre-market lows and gets rejected as new resistance. So these rules keep me fucking sane, guys. So like those are 2 important rules that I just gave you guys. And A lot of traders use them, but they work, right? No trading pre-market. Why don't I trade pre-market? I'm going to use NBEV as a perfect example. And this is like what happened late for me this week, guys, was that my biggest rule, and I swear to God, my biggest rule that has made me sane is no trading pre-market. Because like, look at NBEV, right? You could have let this chart form all of pre-market. So it's basically 850 to 1024. The last rule that I just gave you, you ready? This is what's sick. If short, stop out immediately if stock goes over and holds pre-market highs as new support. Look at this, guys. You could have risked off, gotten, as close to 10 for the over under as we teach in the training. If you don't understand, then that's because you haven't gone through our training, which requires hours of education. But TAT's 10, pre-market high was 1030. It never got above that. There was zero reason to long. This thing got fucking annihilated. So for me, I felt like I didn't need to, I was not in the right state of mind because I was breaking rules all week. And on NBEV, I had a very decent sized short at 440 and covered at 470. And that was yesterday. I covered like pre-market guys at like 7 a.m. because I woke up. Number one, I don't sleep when I have a swing. Because if I have any decent size, like I'm up at 3 or 4, making sure, I'm still good. And when you don't sleep, it fucks with your head, and the next day you're all messed up. So no trading pre-market's huge because it would have avoided all this bullshit pre-market and just let you, all right, open. I'm going to use the pre-market chart and just let that dictate what I'm going to do. If it breaks 860, it's a fucking short. And what happened when it broke 860, guys? It halted down to $2. The rules I just gave you are literally a blueprint to how to trade in a mechanical, systematic type way as a discretionary trader. Does everyone understand that? So that's what's helped me. So when I start breaking rules and I have a huge swing position, I wake up and then things start squeezing, and then I realized if I wasn't stubborn and didn't cut my loss, like I could have blown up my account. But because I cut that loss, guys, I'm still here and I'm happier than ever. Like if I was stubborn and was like, I'm just gonna hold this and keep adding, and it hit 10 guys, like that's how you're done. You're out of the game. See you later. This is a privilege. This is not something that is considered everyone can do. You need to apply certain rules. And and because I realized that, like, what was I doing? Why was I breaking rules? My emotions were all fucked up. And that's when I take a couple days off. So yesterday I cut it pre-market and I was like, I just want to go chill and enjoy life, spend time with my girlfriend, some family, some friends, just do whatever I want to get my head back. And I feel better than ever. And now obviously NBEV is doing its thing, but I love seeing this because it's confirming what my edge was, and it confirms to me why I was fucking up. So like IGC. Another one that these wheat stocks are nuts. I don't know what the headline is or anything, but all I care about is volume. So let's just talk about NBEV volume quick before I move on. It traded 100 every day. NBEV traded more volume than the day before. It traded 20 million. It traded 50 million. It traded almost 90, and yesterday it traded 130 million shares, which is like over a fucking $1 billion, which is ridiculous for a penny stock. So today, if you're going to see it move back up over 10, it's got to trade more than yesterday. That's a rule as well. So you have really big, and you probably could even use 815 or $8 as well, but I would say 760 because it's where it topped out here, 770. So these are very simple rules that allow you to create a type of structure in trading, guys, that allows you to do way less thinking. So IGC, why I wouldn't be touching this is just, even though they have an S3, is the volume is insane. It's noon and it's traded more than it's ever traded before in a full day. So I'm looking forward to all of these next week. I hope everyone banked in chat on NBEV, as well as this DT, which was basically just like this is what you get when the shipping stocks ran. You get these sympathy movers. When the artificial, the crypto, they all had sympathy movers. So be careful and know what you're buying. I even saw this TRPX up pre-market, and this thing went from 7 back to 5. So be cautious. If you don't know what you're trading or how to trade it, be in chat more. You know, our 90-day pro package is pretty dope. You're going to be with me every day. And, you know, this market's not easy. So thinking less is more, guys. So create rules, create structure, and trading becomes a lot easier. So I think I'll open this up now for some Q&A for the next 15, 20 minutes. So this is your guys' chance to shine. Tobias, it works out then if you can't trade pre-market, bro. Let that chart form and use it into the open. Justin, what I'm showing you now is what's called TC 2000. Yeah, Vincent, I mean, you know, having these rules and mental capital is a huge thing. So when you start out trading, your mental capital is going to be very slim. When I would have some small losing days when I started out, they would piss me off a lot more than they do now. So your mental capital will grow over time. Definitely. And I'm only 3 years in, and from year one, my mental capital is dramatically different. Like I took off basically the past 2 days. I haven't really taken off 2 days in a row. This is probably the second time I've done that this year. So versus the first year, I would take a lot more days off, which was necessary. You know, Flora, it's easy to say in hindsight, but based off the rules that I just gave you, you use pre-market high as your resistance until that is broken to the upside. Sometimes these will spike up, and maybe this would have broke 1030, went till 11, and then slammed. But either way, you want to gauge that pre-market high and watch how the stock reacts around it. And you know, it's like I said, I'm not going to be a hindsight hero and say like, here's what you could have done when the stock already did it. But based off those rules, that's how I take trades a lot. Is you risk off that pre-market high or give it like, you know, some wiggle room. AWSM Flora is, I wouldn't have traded it at all because it was restricted. You know, this is just a manipulated stock. This is what I call the stair step, which is when shorts get squeezed, it comes down, they cover, they get squeezed, it comes down, they cover, they get squeezed. It's a combination of shorts getting squeezed and longs. So I don't like these types of charts that do this. I'll be watching it next week, but the problem is that it's restricted at my broker. It's definitely a trash stock, so I'd be watching for 25 to 30 on this for a nice short. Justin, what's up, buddy? I would check out our YouTube, and I would check out this book. Trading in the Zone by Mark Douglas is a fucking money book. And I love this book. The Inner Voice of Trading by Michael Martin. So I'll hold these up for you guys again. Are they backwards? I can't tell. What's up, Simsy? Fundamentals, I'm really just looking at if they make money or not, and then I'll just check filings. I'll check the float, and I'll check institutional ownership. I only gauge short interest for longs. I don't really look at the short interest as much for shorts, but I actually like longing stocks with high short interest and you squeeze out shorts, but I like to long them when they're in pre-breakout consolidation patterns. That's a lot of the Fous4 system with these triangle breakouts. A lot of them can be highly shorted stocks that are squeezing shorts. And my whole first year I longed, and that's what made me a pretty decent short seller, is because I know when to cut my losses and I know when to not short and go long. Yeah, Justice, I'll type these out. These books help guys because they're all about rules and structure, and that's all that the market's about, guys. Like, it's all about your mental, and if you're clear and you feel good and you feel confident, because after a stock moves, it's easy to like be like, oh, I would have done this, or I would have done that. Like that's called being a hindsight hero. So you want to just always make sure you're in the proper mental state, and those books are pretty good for that, as well as creating some form of structure to make sure that you can you know, everyone's different, so your structure should be based off your personality. Tobias, I'm basically looking at a float anywhere that's under 50 million. My niche is more of, I would say, 10 to 30. So if you want to get picky, but 30 and under, and then I'll go up to 50. But sometimes these 100 million floats can trade pretty nuts. And they're not as easy as everyone thinks. They always go farther. So my rule is with over 100 million float, I don't consider it a short until it's up at least 100%. This is also a rule I created off of a large sample size over a few years. Alex, I have to message Rob about uploading them. I'll make sure he uploads them this weekend. They're all recorded. We have to just manually tell him now. Vishal, I do not use the MACD. I don't use it at all. If you want to use anything, use RSI on the daily chart. But everyone's different. I like less indicators. Some people like more. SimC, I just look at volume in general, and volume imbalance is essentially like I'm doing my own volume imbalance and analysis. Is there enough volume to support prices at these levels? This is where I explained with NBEV. Like once you see a stock peak out, like let's use Tilray. If Tilray is going to break back above 300, it's going to have to trade more than 30 million shares. I don't really think it's going to do that. So that's basically volume imbalance. You know, when you start seeing volume dry out, these things don't have the demand there to hold up, so they can get smoked. That's basically the way I've analyzed volume. JC, VWAP is just a really good intraday indicator that shows you if a stock is bullish or bearish. If it's above VWAP, it's considered bullish. And if it's below VWAP, it's considered bearish. That's the most simple answer or definition that you can get from VWAP. It also stands for volume weighted average price. Sergi, you got to look into brokers that have available shares to short. It's hard. The biggest out of the big four, E-Trade's probably the best if you want like a mainstream one. Schwab and Ameritrade are the worst for shorts. But I like longing just as much. So when you start out, I'd recommend you long first and then you short. Don't do it the other way around. It's not good long-term success in my opinion. Sorry, I'm just seeing the Q&A box. Damon, with TC2000, you need the platinum, which is real time, and TC2000, I just do whatever's $100 a month. I don't use the AI on trade ideas. Clayton, I listed some the couple rules that I gave you. I listed in here. I'm not going to list them in chat because I want to show people that you need to come here if you want to have a leg up. I like having these classes and making sure people show up because I drop some gems. And you showing up shows me that you're putting in the effort, and that's what I love. Clayton, I love FinViz. It's $30 a month. I do my quick on-the-fly analysis. I use FinViz, so definitely I recommend them. Alex, they're going to be uploaded this weekend. We have to manually upload them. They're all saved. I just told Rob to do it, and he'll do it this weekend. Vishal, I love. Honestly, I'm big into working out and doing like feel good stuff. So, you know, working out. I'm very pissed off about this, but I sold my Xbox like 2 years ago. My girlfriend loves it, but I hate it, and I tried to start reading more books instead of playing video games to add to my, you know, any guy that's rich in this world, they read a lot of books, right? So on the weekends, I'm reading a lot of books. I love getting massages, playing basketball, working out, and helping people have an impact in trading. Help change my life. So I hope I can help you guys change yours. Any other questions, guys? JC, ideally, I want to have 3-to-1 risk reward, like risk 100 to make 300, risk 1,000 to make 3,000. That's ideal. They also say 2.5-to-1 is a sweet spot as well. So risk 100 to make 250. You know, sometimes your risk reward can be, you know, 10-to-1, 15-to-1. So that all goes back to understanding the chart and, you know, where the potential for a stock can be based off its float. etc. This goes back to training as well. Simsy, because some of them are BS. It's like, so here's what I'll give you guys the example. Like with CBD, you know, everyone knows about this whole marijuana and CBD trend. And like once people realize something's hot and the public's buying into it, there will be all copycats. That's exactly the same with stocks. A stock will throw out a headline like they're getting into the business to watch it pop up. And if it's BS, it'll usually drop. This goes back to doing a little bit of fundamental research, understanding if there's dilution, if they even make money, looking at volume. So that's where training and experience comes in as well, is understanding which sympathy plays might run. The reason like DT didn't run is because it did not trade enough. It did not have enough buying pressure. So remember the rule I just gave you guys with the pre-market high? Once it rejected this 6 level, it was game over. So there's so many fucking people underwater on this. It's insane. And it's a 5 center. Sorry, Alex, but I'm not going to repeat, my brother. I hope you understand there's other people here as well. JC, I use this. If you go through our training, the 13 EMA is a short-term trend indicator. When the stock is above the 13 EMA, it's considered bullish, just like VWAP, and when the stock is below it, it's considered bearish. However, I like to use the 13 EMA on a higher time frame, like a 3 to 5 minute, and I only like to use the 13 EMA in the morning. So this is a perfect example on the short. When a stock is below the 13 EMA, it's bearish. Look how perfectly it's holding this. And on the long, same with NBEV, and then it broke it, perfect short. So I like the higher time frame. If you use a 1 minute, it's going to break it all the time. So use the 13 EMA as a short-term trend indicator. Level 2 is, Miklos, it'll be on the level 2 montage. Otherwise, you won't know. Tobias, level 2 is a visual representation of supply and demand. So the left side is the bid, the right side is the ask. The bid is buyers, the ask is sellers. The ask is also known as the offer. I'm also not saying ass, I'm saying ask with a K, just so everyone can make that clear. Bid is buyers, B for buyers, ask or offer for sellers. So when there is a higher number on the bid side, and sometimes there are spoofing, which means it plays tricks, but the bid is the buying pressure and the ask is the selling pressure. And consider it like a seesaw. When one is higher than the other, when there's more demand than supply, stock will go up. When there is less supply, when there's more demand on the offer and less on the bid, you're going to see the stock crack. JC, the biggest tricks in the market happen in level 2. So yes, it can be very misleading. Damon, we have the scanners posted. If you sign up, they're posted in the resources. You can download our scanners for free. Ian, I mentioned this before. I'll trade up to 100 million, but it depends on certain rules. I like 50 million and under and 30 million and under. I will trade up to 100, but it's all rule based at that point. Simsy, it's all stock specific, but if I see the level 2 where there's some type of hidden buyer, then I'm going to cut my short. That's why I cut my short on NBEV Thursday morning, is because it looked like there was some type of hidden buyer and I did not want to get squeezed. I'd rather take a short-term loss and be wrong and follow my game plan, guys. Like anytime I get to a trade, if I follow my game plan and lose, it's still a win because I followed my rules. You can't think of like, I should have done this, I should have done that. That's how you get into this mental fuckery of a spin cycle. What you need to do is you have a game plan, which is your sizing. You have an entry zone, you have a stop, and you have a price target. That's all it is. And you follow your game plan. So on the level 2, that will help you confirm your game plan a little bit. And if I see some type of action that I don't like, you better believe that I'm going to exit this position. And if it reconfirms, I'll get back in. Vincent, use less size. I have had that problem as well. Just use less size. And start in with less size and scale in as opposed to doing like full size all at once. JC, this comes back to education and understanding charting. If you don't understand how to read charts, you're not going to learn that overnight or me telling you in 5 minutes. So I'd recommend read some books, check out our training. But if you understand technical analysis, then you will be able to read charts. It's like not understanding English and thinking that you could read a book in English. So that's the best analogy I can give you, dude. Clayton, I'm just seeing your Q&A. If I had one piece of advice for a rookie, what would it be? It would be, that's a good one. Make sure you filter the amount of information that you take in on social media. Social media has a weird impact in terms of like Twitter, and you see what all these other traders are doing, and then you think that you need to do it. So by filtering that out, you can focus on what you're good at. And sometimes that's the problem with social media for me, is when you see other traders doing stuff, you'll be like, oh, I should have done that, or why didn't I do that? But you know, it's like, it's all based off your personality. So filter the information that you take in and focus on what you're good at that matches your personality. That's my best piece of advice. So a couple of minutes, guys. I'm going to close this out. Appreciate you guys showing up. Marlon, building confidence is backtesting and journaling. Use TraderView if you want to journal your trades. That's where the confidence comes from. And you understand what works and what you're doing wrong, and you change that by seeing what you're doing wrong. Vishal, if it hits my stop, I'm exiting. I'm not hoping and holding. Hoping and holding. Put those two together. They're the devil. Kyle, I use trade ideas to find fundamentals with ease. Appreciate you guys showing up. Aaron, if you've been trading for years, you figure out what you're comfortable with, brother. That's all that matters. I like trading the open and then being done by 10:30, and some people hate trading the open and like trading after 10:30. Just focus on what you enjoy, bro. There's plenty of ways to make money, but all that matters is matching your personality with a strategy that works for you. I don't care what anyone else is doing. You got to focus on you, bro. So I hope you guys enjoyed this. Pretty dope. 30 minutes. Hope I answered a lot of questions. Hope you guys appreciate the honesty, how it's about this. It's not about what you know, it's about how you feel. So hope everyone crushed it today. A lot of opportunity. I feel great. Taking off personally. Going to do some back testing this weekend, and we'll reverse engineer what I've been doing wrong and look at my rules again and get back into routine. That's all it's about. So I love this community. Hope you all enjoyed. TGI motherfucking F. Capone's ready to chill. Cheers, guys. Good vibes. Enjoy the weekend, and I'll catch everybody in chat and on Monday. Peace, y'all.